Brent, good afternoon, Austin time. Good morning, my time. How are you?
Doing great. Nice to see you, Jeff.
Awesome. Hello, everybody. I'm Jeff Richards, one of the managing partners here at GGV Capital. Lucky to be here with Brent, a phenomenal CEO who we got to back many, many years ago when BigCommerce was a private company, and happy to still be on the board today. And we're very large shareholders in the company. So, Brent, it'd be great if you could do a quick intro of yourself.
Sure. Been CEO, took over for the founders in 2015 of BigCommerce. And as Jeff mentioned, we IPO'd a year ago. We're a software as a service e-commerce platform, meaning we help businesses of all sizes create and run successful e-commerce stores. We have more than 60,000 of them around the world, ranging from startups who create a store in a few hours to quite a few Fortune 1000, Fortune 100 even, companies who are running all their brands on BigCommerce. So you can scale from new startup all the way to one of the biggest companies in the world succeeding online using our software.
So, Brent, you completed an IPO last year. And actually, you and I did a conversation like this with a group of founders a few months ago. We called it Demystifying the IPO, and it was awesome. And I couldn't wait to have you back. First of all, obviously love working with you, but that session was great. And I got so much great feedback from founders that I wanted to do it again. We have a bigger audience today. But I thought, you shared so many great insights about what it was like for you personally as a CEO, the management team, the culture, et cetera. And so I want to jump into that. But maybe let me just wind back the clock to a year before going public, or a year and a half. How did you, as a CEO, and I know you partnered closely with RA, your CFO, how did you guys get the ball rolling? One of the things that I see as a board member for private companies is people don't know quite how to even start the conversation about what the time frame is and what that process should look like. Can you talk folks through a little bit about how did you get the ball rolling, who was involved, and how did you sort of think about the timeline?
Yeah, I think a year is a good amount of time to begin ahead of your target IPO date. And there are really two tracks in my experience, having now IPO'd two companies, HomeAway before this, to preparing successfully. One is call it finance, legal, accounting track. And that's where the vast majority of the work gets done. The more lead time you have there to prepare, working with your outside advisors, the better. And our original decision was about a year in advance, and the work in earnest had been contemplated before that, but really began at that point. The other track is the business track. Most important is the business section of the S1, because that business section of the S1, in essence, is an articulation of your strategy, your positioning, your success. You're weaving in some of the key metrics that you're going to keep talking about. And you want to get that right, because that's what everybody's going to anchor on. It flows through to your roadshow presentation and whatever presentation you put on your website during and after the IPO. Writing the business section, if I've got one piece of advice on that part, should not be left to a committee. The way a lot of companies might do it is either authorize one person to kind of hand out sections of it, where it becomes really a mess and a hodgepodge of different writing styles, different perspectives on how to articulate the story. And it's very hard when you start with a mess to then corral it into something that is beautiful, right? No novels get written by committee. No artwork gets created. Great artwork gets created by committee, at least to my knowledge. It helps to have one person do it. And the better familiar that person is with the ability to tell a great story, the more likely you're going to get through that with a minimal amount of churn. And the churn can be extraordinary if you don't do that. So in our case, I've always sort of been the de facto head of strategy at BigCommerce, and I really wasn't comfortable with someone else's creating a story for us or writing this for us. And so I did the hard work of drafting the S1. And the bankers told us maybe only 5 to 10% of the time does the CEO take that upon herself or himself. But that was the only thing I was really comfortable with, because I knew I would end up spending more time correcting someone else's work than I would creating my own. And everybody's a critic. So every single one of your bankers wants to tell you how they would tell your story differently. And believe me, they will all come in and do that. What they're doing is trying to tell a story for you that they told for some other company and they're already comfortable with. Occasionally, they'll come up with really good ideas. And there's no doubt that in our S1, there are phrases, concepts, and even sections that were the ideas of our banking partners. However, every one of them, if left to tell the story themselves, and they'll volunteer, they'll say, hey, we'll draft it for you. It would have been a disaster had we allowed that to happen, because again, they're going to try to tell the story based on whatever is most familiar from their background and has worked before, as opposed to the story that you're going to tell and stick with, ideally for a good long run of years.
Yeah, that was one thing I loved about that exercise. And I remember you sending Larry and I an early draft, and you really had a chance to pull a lot of thoughts out of your head as to where you saw the industry going and where you saw the company going over the next 5 to 10 years. And I thought that was a very cool exercise. And there were some things that were, frankly, kind of new to the story, but enabled you to really put your stamp on it. And if I recall, correct me if I'm wrong.
And I would stress, Jeff, to that point, the story did improve.
Okay, yeah, it was amazing.
Because we had concepts that we were using internally, but had not become sort of the formal way we were branding what we do and how it's different than our competition. And we galvanized around a key concept. And now it's just ubiquitous in everything we communicate internally and externally. This concept of open SaaS as an alternative to open source or closed SaaS. This was really the grand unveiling of that as a marketing or investor-centric research analyst. I mean, I don't just mean banking research analyst. I mean Forrester, Gartner, IDC. We really galvanized around that concept in the same way that other companies, if you read their S1s, I mean, I loved reading the HubSpot S1 and learn from it because it's all anchored on this concept of inbound marketing. And frankly, I didn't know what inbound marketing was before I read their S1 as a reference. And I walked away from that thinking, oh, this changes my perspective on marketing in the same way that an S1 done well will change the perspective on an industry and your company by readers if you do yours well.
Yeah, it's such a great point. And we had a session earlier today about the narrative. And actually, one of the fun exercises that I've done now with a few companies that are 2 or 3 years away from an IPO is they kind of do, the CEO will do sort of their version of an S1 and usually in PowerPoint format, but just start to get into the rhythm of telling that story. I think it's such an important exercise. And you obviously took the bull by the horns and did it yourself. What were the other moving parts that you had to think about as a CEO in terms of getting the board aligned, getting your management team aligned? You had a number of folks that had not been through an IPO before you had with HomeAway. But, for a lot of folks, that's a little bit of a scary thought. We're going to go from being private and nobody sees what we do to being public and everybody sees what we do. What were the moving parts you had to think about? If I think about back to 2019, second half, as we thought about getting into the filing window, what were the things you had to think about from a management team and a board perspective? Any tips that you'd share with folks?
Well, first, I would encourage CEOs to have confidence that they can do it. If they do have a great CFO, they have a great general counsel. It really starts there. You want to have a great head of FP&A. And if you have great people in those roles, my experience is, it's really great for them to have gone through an IPO before, but it's not necessary. Ours had not gone through an IPO before. And yet I had total confidence because they were all rock stars. This is like, if you're a CFO, a general counsel, FP&A in tech, this is like qualifying for the Olympics. And you've got a shot to qualify for the Olympics and you believe you can go there, compete and win. As these leaders on my team did, then they're going to get fired up and the best will rise out of them. And each of them are so much better as leaders and functional experts as a result of the growth they had through this process. But that's because they had the capacity for that growth, right? They had the ability. If you've got folks who don't have that raw talent, then you're at real risk because this can overwhelm them. They may not rise to the occasion either during the process. And it's not just during the process. You're then, as a public company, it keeps going, right? And the pain will keep going if your people aren't Great. So my point in all of this is if you've got rock star internal people, they can do it without experience. Ours did it. And of course, also having great external advisors that you have confidence in, you work well with, is the other half of the equation because they do a ton of work for you.
So you guys go through that prep process in 2019. We get into Q1 of 20. Global pandemic hits. And I think at the time we had confidentially filed. But I mean, what a crazy time to be a CEO and kind of thinking through, okay, we're embarking on this, the next phase of the journey for our company. Pandemic hits, you got to deal with all kinds of people and cultural issues. How did you navigate that? And I bring that up just because I think people think of as a process to an IPO as this incredibly predictable process. And I've been a part of IPO processes where literally 2 weeks before, the bankers come to the company and say, bad news, market volatility is an all-time high, we need to delay. Or whatever, pricing is going to be off, or there's just a lot of variables that happen along the way, but you build resilience through that. What could you share with folks about going through that Q1, sort of Q2 timeframe with COVID and dealing with that as a leader and a CEO? You kept the process on track, even though there was no IPO market in Q1 and largely part of Q2. And then when the market opened back up, you were one of the first companies to go public because you were ready. How did you deal with that? How did you navigate that? How did you think about that?
Boy, it was an extreme whipsaw, and I'll share more than what you just did because I have in other public forums before this. We confidentially filed with the SEC 2 months before the pandemic was declared, and so by the time March 11th came along and the pandemic was declared, we were within days of flipping from confidential to public filing, and we were firmly on track for a target IPO date a month and a half later, April 23rd. That had always been our target, and we were on track for it. In fact, I remember, I was at the tail end of the testing the waters investor meetings. I had already been to Boston, New York, Chicago. I'm coming back from London. At the start of this, people are meeting with me, but not shaking hands, always. By the end in London, it was kind of 60% of the people are still meeting with us, 40% are canceling. And I was supposed to fly from London to San Francisco as the final stop when everybody just sort of canceled. And so I, came back to Austin instead and did them by video. And then the next week, pandemic declared, and we're like, oh boy. And it was a problem for us because we didn't have a giant balance sheet. We had raised some incremental bank debt to get us through the IPO process, but we're counting on the IPO, both for money and for all the benefits of being public. Now we're like, shoot, how long will the window be closed? This is very risky for us. Do we have to really cut costs because we may not be able to raise more money for a year? Nobody knows what's going on. Meanwhile, we had an offer on the table to buy the company, which often happens in your bankers want to do the dual track process. So, it's not unusual. There was an offer out there from a good company, and we had turned it down up until we realized, oh crap, we can't IPO. And so we went through a process then of going back to that company, the board support, and I was pretty ambivalent about this and saying, well, maybe we should sell to you after all. And so we locked ourselves up in an LOI. And as we got into that process, what we saw was our business was taking off. Like we didn't know what would happen to our business or any other. Our business was already good enough company to IPO. And now we go from this growth rate to this growth rate. And we're like, holy cow, we're a beneficiary. But we're in an LOI to sell. And, we got lucky because in a sense, because the acquirer had skepticism that we could pull off an IPO, especially in this environment. And meanwhile, my confidence was already high. And now it's through the roof, but I've got to talk the full board. Jeff, you were always a bull. But I had to talk the full board into, hey, we can IPO. And my one regret in this whole period is had we not been tied up in that LOI, I think we would have been the first software company to go out. I would have raced for that. I would have sprinted to be the first to go out. And that would have been a lot of fun. We easily could have pulled it off because we were already so close to begin with. But we didn't have that option. And so I don't know what we were, 5th, 10th, something like that. We were early. But we didn't get to go first. All of this and leading through it as a CEO, I think a lot of the people on this call are CEOs or senior execs. and you had your own versions of what it was like to lead through the drama of the pandemic. For me personally, it was, really one of the highlights of my professional life. And I got tested in so many ways that I couldn't have anticipated and I wasn't ready for. And you make good decisions, you make bad decisions, and ultimately the company is partly riding on how you handle lots of these things.
Mhm.
When do you shut the offices? What's your policy? You know, it was exhilarating and fun, and I'm just glad that the final outcome was because I say it's really just like getting to Everest Base Camp. When you IPO, you still got a summit to climb, and it's more than 10,000 feet higher up. That's being a successful public company. But getting to that base camp, ready to keep climbing, was a heck of a lot of fun, and that was our roller coaster.
Yeah. Talk a little about, so you go public, and first of all, appreciate the open and honest lead in, because I think it's helpful to set the context of, like, it wasn't like you just hit a button and we're like, hey, good news, we're public. That was a tough few months.
Yeah.
And so you go public. What was that like for the company? What was it like for the team? What was it like for the culture, morale, et cetera? Maybe the first few months, right? Not just that day, but the first few months. Can you share some anecdotes or stories that might be helpful for folks?
Yeah, I think probably like a lot of companies, our employees in the first couple of weeks of the pandemic were terrified of layoffs and losing their jobs, and going out to them and saying, hey, actually, our business is doing great. Everybody's safe and secure. It helps to alleviate concerns, but there's nothing like then pulling off this type of event. And for a company that had been around for 11 years, we were not an overnight success. I mean, we had to earn, we're in a very, very competitive industry. We have more than 500 competitors around the world. We're a late entrant. Most of those, have been around for 15 years or more. So we had to earn the hard way our path to being big enough, good enough, and successful enough to be what is essentially the second pure play e-commerce platform to IPO. It was so great for our employees. I mean, maybe others had the same experience, but our attrition during the let's call it Q1 or Q2 of last year until the beginning of this year was almost 0% globally, which is not normal. I mean, we've got a lot of salespeople, we've got a lot of CS people, we have a lot of engineers where there's a huge war for talent, and we had almost zero attrition. Our engagement scores of employees, which were already high, went to way above benchmark. I mean, our leaders, I give them so much credit across the board, led with courage and conviction. Even when there were uncertainties and debates in their own heads, they led the people well. And so anyway,
Yeah.
It was a great galvanizing event for our employees. And I already had the experience from HomeAway that even though you might worry about, well, do people cash out and leave post IPO? That wasn't our experience at HomeAway, and for the most part has not been our experience here now. If you get off to a good start as a public company, and people continue to see that the opportunity ahead is as good or better than what they've already gone through, even though they're that much more valuable than they were when you were a private company, they double down. And a lot of our folks have doubled down, for which we're grateful.
Can you talk about the positive? And by the way, I should disclaimer for all those who are tuning in. Brent and I are both very bullish on companies being public. We think it's a great milestone and a great way to not only finance your business, but also build brand awareness and grow the company. Can you talk about impressions in the market? I know you told a story to me about, we'd put out a press release and nobody paid attention. All of a sudden we're public and everybody pays attention. Can you talk about the impressions in the market, the customer base, just, the positive elements of it for you as a CEO and also for the company?
Yeah, I'm a big bull on IPOing, and I'm not saying it's right for every company. I can tell you, examples of companies where it may not be the right choice, but assuming for a second that your company has a strategy and a runway in a market to be a successful public company for many years post IPO, to keep growing and delivering, financial results that investors want to see. Here are the big benefits. So The first big benefit, which may not accrue to every company, but if you are in especially business to business technology, and the more critical your technology is to your customers' success, the more having the credibility of being public will benefit you. In our case, digital transformation is often rated by companies as their number one most important technology investment and priority. And so when companies pick a platform to run their entire digital commerce business on, it is a giant make or break. Sometimes it's the entire business, sometimes it's the future of the company. And it's a huge leap of faith to make that bet on a private company whose growth, strategy, financial profile, all of that is opaque. And you're taking a giant risk on that, especially in our category with 500 alternatives, a half dozen of whom are large market cap, safe bets. Like, Adobe owns Magento, there's Salesforce, there's Shopify, there's at the time IBM, Oracle, SAP. You can go with all those safe bets. And so why would a company go with an unknown private company, especially when our competitors in the sales process are throwing FUD on our heads? We've got to really be way superior to the alternatives to get a company to make that bet. But as soon as you IPO, and now there's transparency into all those things I talked about, your financial backing, your growth rate, your strategy, the credibility of the industry, it helps an awful lot, both the confidence of your existing customers, knowing that they made a great choice and they can stay on it, prospects in the sales funnel conversion, frankly, your ecosystem partners in both, on our side, agencies and tech. Credibility is enormous. And I would say that's number one reason to go in our case. May not apply to every company. The second thing, though, that would is you go from a place as a private company, unless you're a mega big name like an Airbnb went private or a Facebook went private, you don't get much coverage by the media, right? It's hard to cover you because you don't report metrics, you don't have big statements with quarterly earnings and all that kind of stuff. You can do lots of great partnerships and lots of PR and no one cares. As soon as you become public, it's like a 3 to 5x magnification of everything you do because investors can make money off it, because the media has a lot of content out there to work with, because they can grab content off of what's happening with your stock price and all of that. That makes a really big difference too in the realm of just getting the word out, right? And evangelizing for the company. And then of course there is the third thing with morale. And actually motivation. I want to emphasize this point. It's one of my biggest beliefs in life. An argument that a lot of CEOs will make, and even senior employees, is, well, the huge disadvantage of going public is the burden, because every quarter you have to deliver. You can't slip up. If you slip up, everything's at stake. And the pressure is just enormous. Why would anybody want that in addition to the public company rules and SOX compliant and all this kind of stuff? Here is my argument for why that all is awesome. It's all awesome because the only way you get better at anything is by doing things that are new and hard. It is always new and hard, not just to become public, but to keep growing and keep, comping what you did last time with stuff that is also that much better than last time. You build muscle, you build strength, your people grow. If they don't grow, you upgrade. That's how you keep getting better as a leader in any role of a public company. And it's how the people throughout your organization keep growing, because you are on that pressure to keep improving. I love that. I embrace that, not just in work, but kind of everything I do. I want to keep getting better as a father and a husband and as a, spiritual things and as a friend. Like, new and challenge is how people grow. And if you say, hey, look, I don't want to be public because I don't want the burden of all that, then I hope you find other ways to challenge yourself and your organization because you're missing the kind of effort and stimulus that will help people to grow. And by the way, it's not just for you. Your employees want to grow. They want to be challenged. They want to climb mountains. They want to be stretched. They want to see their own capabilities have bigger impact on the world each and every quarter. And their opportunity to be a leader at this company or some other, continue to expand. And I think that happens a lot more than when you're in the safe cocoon of, the private markets and private investors.
Yeah.
Right. That's a little soliloquy, but it's
I'm a believer. You know that. I think the other thing that's been amazing over the last, call it 3 to 5 years, has been, in particular in software and cloud, companies going public and their growth rates accelerating. So it used to be that when a company would go public, analysts would just assume, the growth rate would decelerate because you have law of large numbers. You and I shared a presentation with your team before we IPO'd, highlighting all these amazing companies that have actually increased their growth rate since going public. And I try to explain to folks, it's brand awareness, it's access to capital, right? I mean, you think it's easy to raise money in the private markets? Guess what? There's a lot of people that want to put money into public companies. And then the third element is the point you made about you get better and more disciplined as a company. Everybody knows what you're trying to accomplish, how you're going to get there. You've got the resources to do it. And it's been fun to watch. It's been a fun phenomenon the last 5 years of all these companies accelerating their growth rates and frankly shocking Wall Street at how big the markets are and how much demand there is. It's incredible.
Yeah. Now, I will say the flip side of all of this, and this has been my biggest surprise, especially as a CEO this time, because last time I was a COO. My biggest surprise as a CEO is the risk of myopia as a public company. Mm-hmm. Because when you become public, hitting your quarterly goals and objectives, financial roadmap, service levels is so critical, so important. And if people turn their brains off and say, that's everything, we focus everything on that, and hitting those numbers is an excuse to turn off consideration of new opportunities, new ideas, then what you'll do is maximizing your odds that you're hitting your quarterly, your numbers each and every quarter. And over time, maybe you 3x your company, because you're ignoring all the chances for doing even better and investing now in things that pay off later, not currently. And what I would say is I see that happening in this and lots of other companies. They become so short-term focused, and they don't keep their eye on the prize years ahead. I'm always a long-term thinker, and what I preach to the team is it should be our goal to be able to deliver on all of our plans in a given year with 80% of our effort, because we need to keep 10 to 20% there for innovation, solving problems that arise we hadn't anticipated, reprioritizing when we come up with a better idea, seeing new opportunities. And first of all, you have to just be open-minded to it. And a lot of people, their first reaction is to use short-term goals and objectives as an excuse to ignore that stuff. And people have to just be retrained, because, for example, when you're in school, we're all trained by school. There's no reward for learning something that you're going to be able to use 3 years from now. It's all about what the teacher lectures on, what the assignments want returned, and the test is a kind of a regurgitation on that. But if you want to maximize your intelligence and well-roundedness in life, you don't limit yourself just to what's being taught that day in school. You're constantly curious about other things and expanding your mind. And I say, as a company, once you become public, you've got to rewire people, right? To not become only short-term focused, but really balance that with long-term too.
Well, this was going to be my next question.
Sorry.
No, it's great. I'm glad you jumped into it, because I think, you've already done one acquisition, which has been publicly announced. And, we look at companies like Twilio and others, and, Okta. I mean, if you go back a decade ago, it was pretty rare for a newly public company to do any M&A in the first 2 or 3 years of its existence, because, as you said, they were so myopically focused on hitting their numbers. What we're seeing today is newly public companies within a year, within 2 years, doing multiple large transactions, meaningful transactions, and the market very much rewarding those CEOs for saying, hey, we get where you're trying to go with this. We get that you're playing offense, you're expanding your TAM, you're expanding your footprint in the market. But it goes back to your point, and I was going to ask you personally as a CEO, how do you communicate with the team, the balance between, hey guys, we gotta hit our numbers, but we also have to be thinking bigger picture about how we win the market and take the category, expand our TAM, expand our product offerings. And, that's hard, right? That's not easy as a leader. So, sort of the blunt question is, how do you do it? And maybe it sounds like you kind of have an 80-20 ratio that you communicate to folks, but I do think that's the traditional knock on, if I'm public, I can't do other creative things. But you've done it, Jeff Lawson's done it, these other companies have done it really well, and the market has rewarded it.
Yeah, so there's two types of innovation. There's organic and there's inorganic. M&A is inorganic innovation, inorganic growth, because you don't create it internally, you're buying it. And success with M&A, I think, really begins with having a person in your corp dev world whose sole job is to do that. And we didn't start with that human being. Like, our chief commercial officer has that background, but most of his day is filled with biz dev, not corp dev. And we found out in the middle of the process of that first acquisition, we need a rock star, very senior person who's only focused on first completing this transaction successfully, but then being dedicated to all the additional ideas that we have or come up with over time. So have a dedicated person in corp dev for nothing other than M&A. And as a CEO, you've got to be thinking about this and how do you strategically shake up your industry and propel your business based on inorganic opportunities that you then encourage that person to partner with you on. On the organic side, just to repeat the point I made earlier, it's about really messaging from the top and then coaching when necessary. Every time you see opportunities that are staring you in the face and otherwise the org is not acting on or not acting quickly, you kind of teach people and you say, we can do that even though it may seem tangential or even conflicting with short-term priorities. We can do it. Here's how, here's why. And you want to keep just messaging about innovation. We have a strategy offsite next week. And in that, everybody's focused on next year's plan, next year's deliverables. My big message to everybody when I kick things off is, here's our long-range strategy. We're going to do everything we talk about, but we're going to do another 10 to 20%. And that 10 to 20% extra, compounded over 10 years, is how you get to 10x, not 3x, your current size.
Well, this has been great, Brent. I want to be conscious of your time. I guess last question, are you having fun as a public company CEO?
Oh, I love it. 10 out of 10. And I get that answer by others, and they expect a different answer. They expect me to bemoan X or Y or Z. It's any disadvantages just pale in comparison to the advantages. It's a lot of fun. Couldn't ask for more in my career and want to do it for a long time if I'm capable.
Awesome. Well, thanks, man. Thanks for spending the time with us. Thanks for being so open and sharing with our community and being a mentor to so many of our founders. It's great. We appreciate it.
Thanks, Jeff.